Hey everybody, I'm Mike DeSepoli and welcome to the Heritage Market Pulse for Friday, November 19th, 2021. We hope you had a great week so far. Market's just a couple hours away from closing out the week here. It's been a choppy week, some more volatility this week, and market's looking to post essentially their second consecutive flat week, right? Which is very normal after we had 5 consecutive weeks of the markets moving higher. We started to see some of our technical indicators suggest the market was overbought just in the short term. So when a market becomes overbought, that means it's probably gone a little too far, a little too fast, and it's due for a pause. Now, a pause can present itself in the form of a pullback, or sometimes markets tend to chop sideways for a little while, which is quite all right with us. As we work off some of these overbought conditions, the market will rejuvenate itself and prepare itself for the next move. Now, let's take a look at some of the things that we saw happen this week. Investors are still digesting a combination of strong earnings, rising prices, labor shortages, inflation, and drama surrounding the potential nomination for future Federal Reserve Chairman. We did see jobless claims edge down this week, coming in at 268,000 jobless claims. That was reported yesterday on Thursday. This is down from 269,000 a week earlier. Claims are still at their lowest level since the beginning of the pandemic, but the unemployment rate rather, still high and elevated and needs to be continue to work down. We're starting to see people come back into the workforce as some of the expanded unemployment benefits roll off. So this is a trend we keep our eyes on. We want to see it continue in the right direction. By this point in earnings season, more than 90% of S&P 500 companies have reported their Q3 earnings results, with more than 80% beating analyst expectations. So that is a big validation for this market and the continued growth in corporate profits, because like we've talked about for quite some time, the two main drivers of stock markets are corporate profits and global liquidity. And that's where the Federal Reserve comes in. We'll get to that in just a moment. Now, some news today globally, or really over the last couple of days globally, relative to COVID, as many countries in Europe are looking like they're going back into, or have already declared that they're going back into lockdown. So this continues to fuel the narrative of what we call the either-or market, right? And you've seen this if you pay close attention to the market. The Dow, the Nasdaq, and the S&P have not been in unison much at all lately, right? The Dow Jones would be kind of considered your reopening index, right? A lot of stocks in there that are tied to the economy reopening. And the Nasdaq, our technology index, is a lot of companies in there that are tied to the work from home, communicate from home, shop from home type companies, right? So we've seen this either or kind of symbolicism play out in the market, where you have days where the Dow is up and the Nasdaq is down. Well, now we're going in the other direction as people and countries, or I should say leaders and countries, start to roll out some additional COVID restrictions. So that's something that bears watching. It's some pretty extreme stuff going on over there in Europe. They're basically already looking out to Christmas and canceling a lot of activities there. So, it seems a little draconian, but this is what the market has to deal with right now, and we will certainly be paying close attention to that development. The last major news event that's currently hanging over this market is a lot of discussion about the nomination from President Biden for Federal Reserve Chairman or Chairwoman. Jerome Powell has been in the job for a number of years. In our opinion, he's done a very good job in that role. And there's been some consideration recently, or some talk, some rumors, that someone else on the Federal Reserve Board of Governors, Lael Brainerd, might be in the running to replace Jerome Powell. We expect an answer to come this weekend. We expect word to come from the White House over who will be the next Fed chair. Will Jerome Powell remain, or will we get a change of seat there? It appears the betting markets still believe Powell to be the favorite. But nonetheless, guys, we don't see this either or. We don't see this being a big deal for the market. If it's Powell, we already know what we have. And if it's Brainerd, some people in the financial industry look at her as more dovish, aka more accommodative for financial markets. So we see this event the finality of that event being more important than the actual outcome itself. Once the market can get the information and know that this is behind us, we think the market will receive this news very well. So if you have any questions, that's all we have for now. But always reach out to us. Always happy to talk to you about anything that's on your mind. We'll be back on Monday with the Heritage Market Minute. So until then, we hope you have a great weekend.